any further, where we have Tirthankar Patnaik now joining us, India Strategist at Mizuho Bank on the phone line. Tirthankar, good morning.
Morning.
So, what's your call on the market setup right now? Do you think there's still some more weakness to come, or is it a good buying opportunity right now?
Yeah, I think our markets have belied the trend with emerging markets, with global markets for a while. Since June, our markets have been, fairly strong clip. But now that the overhang of the global macro situation deteriorating is coming to roost, our markets are seeing the pressure. We are seeing the pressure on not just the INR, but also not just the Nifty, but also on the INR. Flows have also petered out. I guess, barring the support from domestic institutional investors, our market could have been much worse, in my sense. And I guess there is, downside, further downside for the markets at this point, if the global situation continues to unravel.
Okay. Tirthankar, hi. Good to hear your opinion today. Do you think that the bank Nifty will continue to be pressured because of maybe further depreciation in the rupee? And the reason I ask is that we had seen a similar trend in 2013. Are we staring at a similar trend now?
The bank Nifty did have some amount of support coming in after the government's recent announcement on public sector banks. They have run up quite sharply. But if the uncertainty on India comes in, the first place people typically need to get out of are the financial sector. And we believe that the pressure on the bank Nifty is probably likely to continue going forward as well.
Okay, Tirthankar, stay on with us. Mahantesh Sabarad is also with us from SBICap Securities. Mahantesh, good morning. You are recommending some suggestions for us, but before that, a word on the way the bank Nifty has fallen, and what's the call from here on?
Actually, the more it falls, the cheaper the index is becoming. More you have banks now really trading at 0.5 or even lower multiples for quite a while now. Fears about the NPAs have been quite frankly overdone. And on the positive side, you should look at the government's stance, and they've come out pretty strongly in terms of recapitalizing some of these PSU banks. So for us, between the cleanup that is happening in terms of the NPA book versus the capitalization that is taking place, the latter looks quite strong. And if the valuation are suggesting that they are at perhaps 5-year lows or 6-year lows, then this is an opportune time to actually get into some of the bank names.
Okay. Mahantesh, you've been looking at autos very closely. Tata Motors continues to make 52-week lows. What's the stress point for Tata Motors, and would you be a buyer at current levels?
See, we don't cover the stock right now, but then at the current level, it does appear very attractive. Much is being done about its China play. Chinese sales for them, for JLR, are going down. Last month numbers, for example, when they released, it was down about 36% YOY, if I'm right. But it's still better than the previous month, where it was some 42% down YOY. Having said that, JLR sales across the globe, excluding China, in fact growing far stronger. So to me, there is purely a sentimental play that is driving the stock down, which says that if you don't want to touch any company who has an exposure to China, here you have a classical stock in India, which is Tata Motors, and you should not touch it. That's what seems to be playing out in the market right now.
Okay. Tirthankar, what's your call on some of these names which have big global exposure? Do you think it's time to be cautious, or is it actually a good buying opportunity? Say a name like Tata Motors or some more stocks which have fallen because of that.
See, I would not like to commit on specific stocks, but our sense is if you want to have exposure to stocks with global exposure, stick to names like in IT, stick to pharma, other places, especially in automobiles. You might see the drop in consumption actually hurting. So the sense is, if you want to go global, go in IT and pharma at this point.
Okay. Tirthankar, wanted your sense in terms of probing a little more in terms of the banks, because we've seen the metals index correct 30% year to date, and the PSU bank index is down 20%. Do you think that the more the metals fall, the more the pressure arises from the metal space, that's how much the PSU banks are going to correct, simply because of fears of what could happen in terms of steel exposure for a couple of these banks?
The government's the government's very quick response in terms of raising import duties right after the devaluation in China shows the amount of concern that's there in iron and steel sector as a sector. You see it in RBI's financial stability reports. Also, this sector features as one where the NPA levels are amongst the highest. My sense is these commodities do go due south from current levels, and yes, they can, given the movements in China, given we saw what happened with the PMI numbers this morning in China. So there is downside on the iron and steel sector in terms of prices, and that in turn translates into further NPA worries for banks. I don't think we've seen the downside, we've seen the bottom at this point. India does remain a long-term story. Of course, India does stand out as a very strong long-term story. It's one country where you have a $2 trillion economy where growth is actually moving up, which is more than what can be said about most countries, most large economies of the world right now. But given the current macro overhang, we are likely to see our outperformance diminish a little bit.
Okay. Mahantesh, let's talk about some stocks then. You have a buy call on Infosys. That's a stock which has done well actually.
Yeah, they've done well. Basically, what we are looking at is the strategic direction being provided by Mr. Sikka to the company. And here we have a new service line offerings that are coming up, and overall US economy actually picking up. So that's augurs well for the IT sector as a whole and Infosys in particular. So we think Infosys in such circumstances trading at a discount to a peer like TCS does make sense in terms of a buy call at this juncture.
Okay. Tirthankar, just wanted your sense in terms of two questions with regards to the macros. How spooked do you think the markets would get if in case the rupee does touch the record low of 68.8? And secondly, do you think that maybe the sentiment for the markets could turn if in case the RBI does act simply because of crude prices remaining where they are?
See, on both cases, one has to notice that after the sharp dip that we saw in 2013, the rupee bounced back up all the way to 60, 61 levels from 67 and all the minimum that we had seen. And post that, there has been a gradual depreciation. One should actually hope for gradual depreciation, but in India, we typically get worried when our currencies fall meaningfully. I would sense that so long as the wall in the INR remains under control, the RBI would not have much reason to worry, and therefore the market should not either. And, in that sense, we believe that India's outperformance would continue to remain, and I would sense that unless INR volatility really moves up significantly, we should not see a negative turn happening on the Indian markets now.
Okay, so Mahantesh, in the mid-cap market, is there anything that's become attractive now after the fall?
So there are two names that we have been suggesting to our clients. One is Dish TV and the other is All Cargo Logistics. Let me talk about All Cargo. All Cargo is a CFS MTO kind of player. It's doing decently well. There's a global exposure in the form of its MTO business that exists globally. There is this local CFS. So we are seeing a meaningful uptick in utilization of their CFS. They also incidentally are into the project and equipment handling. So we are seeing gradual improvement happening in the company in terms of valuations at just at about 11.5 times FY17. It appears very cheap. So that's one stock that we like to push. The other I talked about was Dish TV. Dish TV has been showing strong cash flow generations, improving visibility on the EBITDA margin front, and hence reducing debt component going forward. So there is also an element of pricing flowing in. So useful revenues are coming in. We think that's one stock one should really look at going forward.
Okay, and you have a pick in the pharmaceutical space as well.
That's not pharma, that's the consumer health brand,
GSK Consumer.
That's GSK Consumers. So GSK Consumer is actually trailing peers in terms of its valuations, and we think that going forward they have a strong portfolio of products. There'll be minimal ad spend, advertising promotion spends will be controlled, so that will drive good profitability growth
Don't
going
you
forward.
think it's too expensive?
Most consumer stocks are, on an average, most consumer FMCG companies are something like 40 multiples thereabouts, or 35 to 40. So given limited choices in the space, these are businesses that keep throwing cash in the business, and they somehow or the other end up rewarding the investors. So naturally they have a high valuation, and if you have a company which is at a discount to the other peers at 31 times, then obviously makes sense to invest.
Okay. Tirthankar, final question to you then. What's the downside risk to this market, considering the kind of global cues that we have and even some of the domestic negatives? Do you think it's a possibility to see Nifty back below 8,000?
I think the possibilities would be remote, but one would not rule them out at this point. Given the sharp fall we've seen in the Asian markets recently, an 8,000 number is not off the mark. My sense is that India's outperformance will remain, but in terms of direction, it's due south, at least for now, till we have more clarity on what finally happens in China and what is the date that the Fed actually chooses to take its first rate hike.
Okay. All right, Tirthankar, as well as Mahantesh, thank you very much for joining in and talking to us. Mahantesh's disclosures should also flash on your screen. For the Nifty, 8250 thereabout is where we're holding. Time for a break now, but more on the markets as well as maybe the currency space when we're back.